The title itself is very indicative. Here, what we will be looking at is what is the market value of this joint product at the point of splitting off, at the point of separation. Okay, so that is the basic concept in market value at separation point method. I repeat, here the joint costs are apportioned in the ratio of market value of joint products at the point of separation. Say maybe when you are in the verge of finishing point, you might separate your milk. Suppose we are talking about dairy products, we might separate milk, butter, cheese, all these separately. So all these have its own market value, right? The value of milk is different from that is there in case of butter or cheese or maybe yogurt, right? So that is actually what we consider in this method. And there is one example we will just look at. It is very simple. In this example, there are two joint products, okay, X and Y. And the combined value, the joint cost of these is 60,000 and the market value of X is 40,000 and Y is 80,000 respectively. Now we are asked to apportion the joint cost on the basis of market value at separation point. So definitely the ratio of apportionment here would be 40:8, or as I say 1:2. If we minimize it, it will be 1:2. That is the ratio at which we will be apportioning the joint cost to the different product, that is X and Y, because we know that in market value separation, market value method, what we do is we consider the market value as a ratio for apportioning the joint cost. So that's how we do in this method. Let's look at it. Here it can say that the ratio is 40,000 is to 80,000. That is nothing but 40 is to 80. If you minimize further, that will become 1:2. Right. Now we know that in the question it is being given the joint cost of X and Y is 60,000 rupees. So this is the amount which we have to apportion between X and Y. Right. So when we are apportioning, it's very simple. That's just 60,000 into 1/3. Now how did I get 1/3? It's just this ratio. Right. If not, it would be 40/120. If I'm not minimizing, right? So it will be 60,000 into 1/3, which I get. The prorated cost of X would be 20,000 and prorated cost of Y similarly would be 40,000. So in this method, here the point of apportionment is, that is the keyword. The point of apportionment here would be the market value of the joint products at the point of separation, also at split off, at the time when we are trying to split off that from the one combination. From that one combination, if you're splitting out, what is the market value? So that is the first method which we have discussed today. Okay, so market value at the separation point. Now we are going to the second method, which is yet again, there is similarity between this method and the next method which we are going to discuss, market value after further processing. Say for example, in the dairy products itself, which I had been discussing, sometimes there would be further processing required for this product in order to place that in the market. Say for example, when we are talking about milk or butter or cheese, there is some kind of processing, maybe in some cases, because butter, of course, if it has to stand the temperature variations in a place like Kerala, they have to do some kind of modifications in the raw product depending upon the climatic conditions. Otherwise, sometimes you may not get butter in that format. It is the case with cheese also. So they might require some further processing and which incurs additional cost. Okay, so that is the logic in this method. That is, it's not the market value alone at the point of split. Okay, it will also include the cost involved in further processing the product. That's why I said the example of dairy products, where you require some kind of further processing before the product is brought to the market. That cost also will be taken care when we are apportioning the joint cost into different products, into different joint products. Okay, so that is this method all about joint costs are apportioned in the ratio of market value of joint products after further processing. So in certain cases, after processing, the market value can increase. It's not the same as no as we say it's just the raw form and the further processed form. Maybe we can talk about yogurt. It's actually you are further processing it to create another market for dairy product, right? So there is some cost involved. At the same time, the price of yogurt is little higher than what it is placed as curd in the market. It's high because there is some kind of processing that is being done in that product to make it more attractive. That is being considered in this kind of apportionment when we are talking about joint products. So I put one example here from a joint process, that is 500 units of X, 300 units of Y, and 200 units of product Z. So there are three joint products, right, are obtained which have market value 40, 50, and 30 per unit respectively. The post split off costs were 5,000 for X and 5,000 for Y and rupees 1,000 for Z. The joint cost amounted to be 18,000. So this is the amount which we want to apportion. But we know that we have further processing cost which is there for this product. So the market value needs to be adjusted with that. Right. So that is why first we will compute the market value. Now, how do we compute the market value in this case? It's very simple. We have 500 units of X, which carries a market value of rupees 40 per unit. So how do we calculate? 500 into 40. Same as the case with Y, it would be 300 into 50. Same as for Z, it would be 200 into Z. Now we will have to adjust it with the further processing cost before we go with the apportionment. Okay, now let's see how we do it. So here, this is the market value which we have computed. That is 500 into 40. It's already given in the question. 300 into 50 and 200 into 30. We get the total of the joint products market value is 41,000 at the time of splitting off. Okay. Now what we need to find out as per this method is we have to consider the processing cost after the splitting off. So what we will do, it will be 20,000. 20,000, how did I get this 20,000? It's basically the market value of X at the time of splitting off. From that, I'm going to reduce the post-split off cost. Post-split off cost, it's already given in the question that you have a processing cost of, that is the post-split off cost of 5,000. It's nothing but the cost involved in further processing the product. So we have a cost of 5,000, which again is reduced from the market value to get it adjusted with the actual cost. So that's what we are doing here. 20,000 minus 5,000, which will give us 15,000. In case of Y, it was 15,000. See here, it is 15,000. And the post cost, split off cost is 5,000. We adjust it as, so we get 10,000. And in case of Z, it is 1,000 and the market value is 6,000. So we get this, and the total of this would be 30,000. Now we have both the numerator and the denominator for the apportionment of the joint cost. So what we do, we find a proportionate allocation of joint cost based on market value at the time of split off as well as at the time of post split off. Okay, so here it will be the total X, the post split off cost is 15,000 upon the total of 30,000. The total is 30,000. So 15,000 by 30,000 into the joint cost. That is, here in this case, it is 18,000. It's already given in the question. The joint cost amounted to 18,000. So what we do, we find out the split off cost. We establish a ratio, that is the actual split off for particular product by the total split off into joint cost. So here the joint cost is 18,000. So very simple. You just have to understand the logic why it is being done. Right. There is a similarity. Market value is being taken, but it is extended further with the processing cost. That's only difference in this method. Okay. So 15,000 by 30,000 into 18,000, we will get 9,000. Same as the case for Y. Here it is the split of the market value. We reduce with the post split of cost, we will get 10,000. So 10,000 by 30,000 into 18,000. Same for Z, it would be 5,000 by 30,000 into 18,000. So this is what we talk about market value after the processing cost. That is after further considering the processing cost method. After further, suppose if a product doesn't have a processing cost, it is very much ready after the no after the split, you will not use this method, you will use the previous method. It's not needed because why? They do not have any processing cost, they are ready to be sold in the market with the market value. In that case, you can go with the previous method. But if you think that the product requires some kind of processing which carries some cost no, associated with that, we will go with market value after processing method. So today we discussed two methods. One is market value method. Okay. Second one is market value after processing method. So the thing which you have to remember is, yes, there is a processing cost that needs to be adjusted before the cost needs to be apportioned, before the cost of joint product needs to be apportioned. That's the only thing which you have to remember. Right, now going with the third method. This is a little different, but still here the crux is market value. Okay, in this method is called as net realizable method. Net realizable method is nothing but actual value realized from the joint product. Actual value which is based on your cost and profit. That's what you consider in this method. And of course, I have put that joint costs are apportioned in the ratio of net realizable value of joint products. Net realizable value of joint products is computed as such, where we will look into the saleable value, the profit, the cost, all associated with that before we come to a conclusion. Now, there is a question, there is an example in front of you. That is, this company operates a chemical process which produces four joint products. Byproduct is a different concept which we are yet to discuss. Here it is four joint products, which is P, Q, R, and S. From the basic raw material, and the raw material cost is given very clearly as basic raw material cost, which includes 1,25,000 units at the cost of 2 per unit. So it will be 2,50,000. The total cost would be 2,50,000. Plus you have 1,50,000 as initial processing of wages. Then again you have overhead cost, which is 1 lakh. Now they also given us the output, the selling price, and additional processing cost for us to understand what is the net realizable value. So the basic cost being given and the additional cost is given in a table like this. In the table, we can find the output in units is being given. The selling price per unit after further processing is given. So this helps us to find out the sales revenue value, and then additional processing cost after split off is also given. So here we know that since this is being given, we have to consider this because there is processing cost, but there is little more addition than the previous one. Okay, so how do we do this? We prepare a statement like this. Okay, the statement will start with product. We have an output in units. It's already given in the question. We have P, Q, R, and S, right? So respectively, they have 10,000, 20,000, 30,000, and 40,000 output in units. Now, as in the question, they have also given the selling price. Okay, so in that case, it is very easy for us to find out the sales value because we had been learning this over these years. Output into selling price per unit will give us sales value. So here 70 into 10,000, we got the sales value. It's same for the QRS. For all these cases, we do like that to find out the sales value. Now we know that in the question, they have given further processing cost. We need to consider that, and we know that this is the cost incurred after the splitting to make the product suitable to be sold in the market. So that's a cost associated with product development. We need to consider that. So we are just considering that in our answer also. So what we do, we add the further, that is we consider the further processing cost along with the cost factor. Okay, so further processing cost is 2,50,000 for A. Now we know that the net realizable value of this particular product would be sales minus further processing cost, because this value, sales value, was computed after all the cost till the split off. But they had not considered further processing charge, which will incur once the product is split off. So that has been given in the question. So this 2,50,000 is being considered to find out what is the actual realizable value. What is the actual value you are going to get? When I sell the product for 7 lakh, if I say that I already had a cost of 2,50,000, then naturally the actual realizable value in this case would be 7 lakh minus 2,50,000. Right? Same as we think, logically as we think, when I'm going for selling a product, and I sold my product at 10 rupees, I got a profit of 8 rupees, but I might have incurred a traveling charge for taking the product to the location of sales, to the point of sales. So that should be considered before I decide what is the actual level of my profit. Same as the case here also. All the costs till the split off was considered, but there was some other additional cost which was under the category of further processing cost that needs to be considered for us to go with the net realizable value. So what did we do? We reduced that further processing cost from the sales value, that is 7 lakh minus 2,50,000, we will get 4,50,000. Same we did for all, right? And then what we do, we are allocating the cost, the proportionate allocation of cost based on the sales value. So what we do is we find out what is the total of net realizable value. Here in this case, it is 25 lakh. And we know that the total of cost is 5 lakh. How? Because here they said the basic raw material is 1,25,000 units at the rate of 2. So it will be 2,50,000. Then we have 1,50,000 as initial processing cost. We have initial processing overhead cost is 1 lakh. The total of that will be 5 lakh. This needs to be apportioned. This needs to be shared between all the joint products, that is PQRS in this case. Right? So what we do, we put 5 lakh as a numerator and the net realizable value, the total of the net realizable value as the denominator. That's what we did here. We put the total cost, which needs to be apportioned in the numerator, and the net realizable value in the denominator, which is multiplied with the concern, that is the actual realizable value. Say for example, in the first case, it would be 5 lakh divided by 25 lakh into 4,50,000 for us to find out the proportionate contribution. That is 5 lakh is the total cost which needs to be apportioned. 25 lakh is the total of net realizable value, and 4,50,000 is the net realizable value for this respective joint product, that is P. That's how we did in this. It needs to be done for all the 4 cases to find out the cost of apportionment. That is the cost of apportioned cost for each joint product. That's what we call as the apportioned cost of each joint product, namely PQRS. So in the net realizable value, we really have to find out the net realizable value after considering all the costs associated with the production of a particular product. So in our question, generally we will be given with the revenue as well as other costs associated with the product production, which needs to be adjusted with the revenue to come up with the net realizable value. And when we get the net realizable value, which is very easy for us, we are going with the proportionate allocation. With allocation of what? The total cost. The total cost of production. Total cost involved in that processes needs to be apportioned. So till now we are discussing about first we discussed about market value method. Then we discussed about market value after considering further processing cost. And now we discussed about net realizable value. So when we are talking about market value, the key point which you have to remember, the quoted thing which you have to remember is here the proportionate allocation of cost into different joint products will be done on the ratio of market value of each of the joint product. That's the thing which you have to remember. When we are talking about the second thing, that is the market value after processing, here also the logic remains same, but we know that this particular product has further processing cost which needs to be considered before it is being apportioned. So we consider the processing, the further processing cost with the sales value, and then we go with the apportionment in that. And here in the net realizable value, here also the concept remains same, but what we are looking at is we are looking at in a different angle. We are looking at from the angle of net realizable value of a particular, the actual value that will be released to the particular company when the product is in the market. So here also we consider the sales value or sales revenue. We consider further processing cost, and a new term is introduced as net realizable value, which will be the basis for apportionment. That's net realizable value method. And the next method is reverse. Little different from these three methods. So that is why this is called as reverse cost method. Okay, but this is the simplest of all. It's very simple. It is more or less like our cost sheet. Okay. The reverse cost sheet method, joint costs are apportioned in the ratio of joint values of the joint product at the separation point. So here we are not going with the concept of processing, further processing, nothing. We are considering at the separation point. But there is another concept called estimated profit of the product. That's a concept which has been introduced in reverse cost method. That's why we say reverse cost method. We look at the sales, we look at the estimated profit, we reduce the selling and other distribution expenses to arrive at the joint cost of the product. It's actually separated at the point itself, and then we adjust the cost separately to each joint product to arrive at the joint cost. Okay, to do the apportionment. So it's little different, but it's the simplest of all. Now let's look at here. In this question, as we can see, there are three products, A, B, and C are obtained. These three are the joint products which have been obtained in a single process. And they have said the total cost of these three products amounts to 13,500. But this is of no use for us in this context. Either we will have to be given with the ratio of splitting that into different, splitting that for different joint products like A, B, C, or we need to be given a ratio like this in order to establish and find out the actual cost, actual cost of apportionment here in this method. So here in this question, even though they have given a total cost, they have also shown it separately for each joint product. So you can see from the question, they have put it separately as C, material, labor, and on cost. The other cost total amounts to 3,500. Same as the case for B also they have put, and C also they have put. They have also put the sales value and the profit. So it's very easy for us to do in this case. So what we can do here is first we will start. It's more or less like how do we go with as a computation of profit. So first we start with the sales. The sales, it's a value. It's maybe you are given with the units and per unit, or you might be given with a question like this where the sales value is actually given in your question. So here in this question, sales value is given. So we'll just put it across. A, 21,000 is given. B, 10,000 it is given. And C, it is 9,000. That's also given in the question. So we just make a total column also for us to make the computation little easy. Okay. Now, profit is also given in percentage. So what we do, it is 50% of 21,000. So it will be 10,500. That's already given in the question. We don't have to do anything. It's given in the question, 50%. Normally, this will be the pattern. You will be given with the information, or you will be given with the information to compute it. Okay, in this case, we are computing it 50% of profit, and here it is 50%. Again, it is 5,000. And in case of C, it is 33 and 1/3%, so which is 3,000. The total column, we will put the total of it. Now we know that the cost of production, it's been given here in the, as such, the cost of production. How do we find out? It is 21,000 minus 10,500. We get that's just an understanding, cost of production, right? So it's actually we are reverse. We are doing the cost sheet in a reverse way when we consider from the cost sheet. That's why it is called as a reverse method. Right. Finally, we arrive at the profit. Here we start from the profit. So that's why it is called as a reverse method. So cost of production, we have it with us. And from that, what we will do, we will reduce the split of cost. Reduce the split of cost, right? So that will be, we have the cost of production with us, right? Reduce the split of cost, that is 3,500, 2,500, 2,000 and 2,500. It's already given in the question. So the balance would be the share in the joint cost. Automatically we got it without allocating it because we started with the split off point. That's why here finally the answer we arrive at. Now how did we arrive at the 7,000? It's nothing but our cost of production minus split off cost. That is the cost at the time of split off is being reduced and we get it, and the total. See, now you can see the total is already met here. It's been apportioned without any formula directly by proportionately allocating to all the products. They gave the total in the question, but we did not go with any ratio computation, but we did automatically through a reverse method. Reverse because, why it is reverse? Because we started with sales and adjusting the profit and then arriving at the cost of production, and from that we reduce the split off to find out the joint cost. But normally in a cost sheet, it's not like that. We start with adding all the cost, right? Then we find out the sales value, and then from that we reduce the profit, expected profit to arrive at, we reduce the expected cost to arrive at the profit. But here it is not like that. We started with the sales, we reduced the profit, then we found out the cost of production, we try to allocate that. That's why it is called as a reverse method. So this is little different, but I think this is very much much easier for you because you've already learned the format in the previous semesters. So today we learned 4 more methods of apportionment of joint products. The first one we learned was market value method, where the apportionment is based on market value of the products, of the joint product. The second one is market value after considering further processing cost. So that's why it is further processing cost method. Market value further processing cost method means here whatever cost some products require. That's a reason for such a method. Some products require further processing. So that cost is also considered when we are going with apportionment of joint cost. Now, the third method we learned is net realizable value method. Here the concept remains same, the logic remains same, but it is introduced in a different way called net realizable value. The actual value realized when the product is brought to the market by considering any other additional cost. So that is why it is called as net realizable value. And the last method is just, it is called as reverse method because it is just the method or the methodology used for computing the apportionment or for computing the joint product cost apportionment is the reverse of what we had been following in preparation of cost sheet. Here we start with the sales value, we reduce the profit, we arrive at the cost of production. From that, we reduce all other costs to find out what is the joint cost, share in the joint cost of each of the joint product. That's how we did in this format. And instead of going with any ratio-based apportionment, here we directly shared it with each joint product and finally arrived at the share in the joint cost. So these are the 8 methods of which we are learning. There are many other methods, little more complicated methods, but as per your syllabus, these are the 8 methods which we are learning for apportionment of joint products. I'll just quickly summarize. We said joint products are those which are produced in a single process, which are separately identifiable, which have identifiable and high saleable value, right? And since they have to be brought to the market as separate products, their joint cost needs to be apportioned between each joint product. So that is the context in which we are discussing this topic. So the concept of apportionment will come. Then we learned about what are the different methods, accounting methods, cost accounting methods used for apportionment of these costs. In that, we discussed about 8 methods in our last 2 classes. Okay, the first method where the physical unit or the volume was the basis for apportionment. That's why it is physical unit method. The second method we said about average unit. So it's just averaging and normalizing and then allocating it to the different units. That's what we did. And then we went with a survey method where I believe you remember that the weightage. Some products were given higher weightage based on their grading, maybe based on their quality or some other feature. So that was the logic of survey method. Then we discussed about the contribution method. And now contribution method, it is very easy for us to remember because in that method, we divide the cost into marginal cost and fixed cost. In case of marginal cost, we say that it is actually additional cost incurred for production of a unit. And in case of fixed cost, it's nothing but those expenses which will be incurred even if you do not continue with your operations. And then in our today's class, we discussed four more methods, starting with market value method, market value after processing, and net realizable method, and the last one which we discussed is the reverse cost method. So these are the 8 methods. And now in our tomorrow's class we will be going with byproducts.